Vol-wise, let me jump into the actual platform on Vol. I think that's going to be better. So where is it? Google Chrome. All right, cool. So yeah, here we are with the Ambit Data platform. So you can see Parkinson realized on Bitcoin got as high as 100, over 100, has come down to about 85. Implied vols hanging in at about mid 60s. So we've got a variance risk premium of negative 18 vol points there. So clearly being short gamma is not the attractive way to be right now. Looking at ETH, we got to 120 on realized, down to about 100 now. And then implieds are about 85. So similar variance risk premium, around 17 points, negative. So negative variance risk premium means that implied vols are cheaper than realized vol, which means owning gamma is actually working really well and you're having lots of opportunity to trade around it. Curves, obviously very backwardated, inverted, whatever you want to call it. So you can see that here. So front ends, as I said, near 100 on ETH and looking, if you look at absolute front end, like we're talking about a couple of days type stuff, then yeah, then you're looking at 80 on Bitcoin and 100 odd on ETH. Looking at the changes on the week, you can see weeklies were up about 5 points, 8 points on ETH, 5 points on Bitcoin. At the monies were, beyond that, fairly stable. You can see Bitcoin slightly softer in March expiries and then slightly bid beyond. ETH was up about a point in March expiries, but backend was up nearly 3 points. So seeing a bit of a bid come back for ETH vol there across the curve. Looking at time series, you can see usual story where you get these waves of front end getting expensive, then collapsing back down to a more neutral curve and then going again. It's basically tracking realized in that way. So when realized is calm, we've got a flat curve. When realized pops, we've got the front end catching a bid. That's kind of what's been happening lately. So no real change there. And usually the weekend does find a bit of selling, right? So normally you get that dip in the front end into the weekend as people price in a bit of a quieter time over the weekend, which isn't always correct. Sometimes we do move over the weekend. Looking at skew, lows in skew were about 7 vols for puts on Bitcoin. But you can see the long end on Bitcoin is pretty stable there at around 2 to 3 vols. On ETH, we got to about 15 vols for puts. Then we kind of reverted back and kind of now we saw on that dip overnight, we got to minus 14, but we're back to about 5 vols now. Now the long end skew is starting to get squeezed out in terms of calls. We're down to about 1 vol point in the long end now on ETH, and that's in the kind of 6-month bucket. So, you've got to go quite far out the curve now to get a call premium in Ethereum because the technicals just look disastrous and it is really impacting risk sentiment quite dramatically. All right. And then if I can bring up, actually in the report, I've just got the OHLC charts. They're just showing that implied levels have been getting breached over the last few days. So just kind of shows you that instability really. And the fact that it's hard if you're short gamma because you're getting really wild swings, right? Okay, I would say relative value. Let me bring it back to the report over here. There we go. Relative value wise, well, first let's just talk about skew a little bit. So as I mentioned, the skew has been getting dragged down a bit in Ethereum. So to get into cool skew, you've got to go as far as September. Bitcoin goes into cool skew in June still. So we have still got the back end skew showing that we're in a bullish regime still most likely, but it is starting to drag it a little bit down. So we're not a million miles away from ETH skew flipping into puts across the whole curve, which may be quite a nasty sort of tell or indicator basically. Front end skew though did dip down, has bounced. Because it kind of chases the spot around. So we spot up 5% today. Makes sense that some of that put skew is coming back out. We've got a hedge ratio right now in our hedged crypto vault at around 50% on Bitcoin. So fairly sort of back to where it generally is. We're normally trying to run about a 50% number. Sometimes it gets bigger if we're particularly bearish. We did monetize some puts on the way down last week, but we haven't really done much in that vault this week. I am bidding. I'm bidding a scrap to get the March end of March 110 calls back just because they're not worth anything or they're worth very little. So try and buy those back to give me a bit more firepower to maybe put some short calls back on if we were to get a pop, say on a weaker CPI or something like that. And then here, relative value wise, ETH Bitcoin spot spread does remain in a strong downtrend, hitting 0.023. That's a new local low, and it's a level not seen since 2020. Front end vol spread is at about 20 vols, or a little bit over 20 vols. That has pulled back from the highs, which are at like 30 odd. Realized though is around 20 right now. So it's kind of consistent with where implied is. So it's about fair. Skew relative value curve, kind of showing us about -2 out to June, which is saying that ETH puts are 2 vols greater than Bitcoin puts in terms of the skew. So again, it's basically saying that ETH is considered more vulnerable to a crash than Bitcoin right here, right now, basically. So, but that shouldn't be a major surprise given that the technical setup looks disgusting in ETH. All right, that is it for the vol roundup in crypto. And I will be whacking out some portfolio updates and single stock screeners later on today. All right, cheers guys. Cheers for watching. Catch you next time.
Hi everyone. Thanks for making it to the end of the video. Remember, this is just a little taster of what we do at Options Insight. To get access to all our research, including my in-depth vol market insights and a whole lot more, you can sign up at options-insight.com. I'll see you soon.